So in this video I'm going to be talking about how we obtain and analyze cost data. Now we talked about different types of costs last time, so I'll just do a quick recap. So we said there are two types of cost. There are fixed costs and then there are variable costs. And we said that fixed costs don't vary with or don't change with the level of production or sales on the short run, while variable costs do change directly with the level of sales and level of production. And we said if we add these two costs, we get total costs. And if we divide total costs over a specific period of time over the total output produced over a specific period of time, total output, we get the average cost. And I said last time that the average cost is basically is cost needed to produce 1 unit of output. Okay, so now we've done a quick recap. Now we're going to obtain and analyze data. So here's a scenario, okay? And in this scenario it says the business X, let's just write business X, has fixed costs of 30,000 per year. Its variable cost is $5 per unit. Each unit is sold for $10 and its maximum output is 10,000 units. Okay, so I'll just tell you what we need to find. In this case we need to find total costs, we need to find average cost, and we need to find revenue. So these are the three things which we need to find. Okay, so first of all let's look at the output. Okay, so the output we're going to do like a sort of table kind of format in order to make it. So the lowest output of any business is 0 products produced, and for business X the highest is 10,000. This is like the structure, or this is the main part of this table. Okay, so output. Okay, now we'll move on to fixed costs. Now as we said, fixed costs don't change with the level of production or value or level of sales, so therefore it will stay same in any kind of production, level of production, or any level of sales. This is on the short run. Okay, so now variable costs. Okay, now we said variable costs do change, they're directly related. So as it said over here, $5 per unit, so that means $5 per unit, and unit is basically this and this. So 5 times 0 is 0. 5 times the number of units, which is 10,000, so $50,000. Now we can calculate total costs. So in this case, total costs when our level of production is 0, it will remain 30,000. When level of production is 10,000 units, it becomes 80,000. Okay, so now we have that. Now we can, using total costs, calculate average cost. So now let's calculate average cost. Okay, so we'll do total cost divided by total output. So as you can see, total output total costs when our total output is 0 is 30,000, and you can divide 30,000 divided by 0. So in this case there is no average cost. In this case there is, which is 80,000 divided by 10,000, and the average cost is $8. And we said, as you can see, cost needed, this is that over there, so cost needed to produce 1 unit of output. Okay, now lastly, revenue. Now let's talk about revenue over here. Okay, so you got revenue is basically the total income produced from the sales the sales of a product, it's one product, so each product has different revenues. Okay, now total income, when we mean income, it means like the money that goes to the business. So this basically means money that goes to the business, and in this case it's business X. Sales means the number of product, or sales means product sold. Okay, number of product, so a number of products sold. Okay, so now we know that. So now we'll calculate revenue. Wait, I forgot to tell you revenue formula. So revenue is basically quantity times price, selling price of the product. As you can see, selling price is this $10, and quantity is output, so 10 times 0 will remain 0, while 10 times 10,000 is output, it will become 100,000. Okay, now we have calculated we have obtained the cost data. Now we need to analyze it. Okay, now let's analyze what is business X's position. Now as you can see, average cost over here is, or as we said, is cost of producing one unit of output. So we said that the selling price is $10, so and average cost is 8, so therefore they have raised the price, and these guys are trying to make a profit. Okay, so I'll just now write a quick note. So if average cost is less than selling price, this means that the business is making a profit, and in this case business X is making a profit. But if average costs are greater than selling price, this means that the business is making a loss, and when it makes a loss, it means it won't be able, business wouldn't be able to cover for its costs. Now you can compare total costs with revenue in order to see whether business X is going to cover its costs or no. So as you can see, these total costs in will have to be paid, and revenue is 0. This is when output is 0. Okay, now let's move on to 10,000. When output is 10,000, revenue, as you can see, is greater than total costs. Now since revenue is greater than total cost, this means that these guys are making a profit. Okay, if revenue is greater than total cost, then they're making a profit. If revenue is less than total costs, this means that they are making a loss. Okay, now let's say that the business was producing 5,000 output. Okay, let's just quickly do this. So if there was like a middle, so these guys were producing 5,000 output units of output, fixed cost would be 30,000. So fixed cost 30,000. Total or variable cost would be 50,000 times 5, so 25,000. And for so therefore total cost would be equal to 55,000, and total revenue would be equal to 10 times 5,000, so 50,000. So as you can see, revenue is less than, so in this case that this is greater than revenue. So in order to cover for those costs, this business will have to increase its production. So if it did, like in this case, let's say it increased its production to 10,000, then in this case revenue will be greater than total costs. I hope you guys enjoyed this video. Please do like, share, subscribe, and comment.